Success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you are doing or learning to do. Pele, the soccer great, and Pele is, of course, right. One thing you got to do is you got to stay motivated. You've got to love what it is you're doing, as well as working hard, persevering, learning, studying, sacrificing. What do? 10 to 15 minutes a day. We follow these markets each and every day. In your financial future, what could be more important than being able to follow stocks, being able to chart, having a mastery of technical analysis? Even if you're a value investor, which is great, everybody should be a value investor. Shouldn't be even if. Everyone should be a value investor. You never want to buy higher than you should. You never want to sell lower than you should. So practice with us every day. Learn what charting is all about, how to follow the waves of price movement. That's what we focus on. There are times, let's move on to trainings. There are times when I produce videos that I know are going to rocket to the top, such as when we did the Heiken Ashi candlestick video, when we did the price percent oscillator video. I've done lots of them over the years, and several of them are top ranked across YouTube and other places. This is one destined for that category. It is on secrets of profit and loss bands. And what you see on the screen is a screenshot taken from the video. And you can see the profit band at the top in green, the loss band at the bottom in red. And the video training we have for you for free actually shows you how to create those, how to employ those, how to use those, how to see what there is to see, because the profit band actually helps you see how close you're getting to your profit and if you're going to actually hit the profit that you've set in your practice trade. The loss band shows you that when you hit that, you are to get out of your trade at that point. Now, what's very important is knowing how to apply these, where to apply these, when to apply these, and how to use them. And the free video that we have in the show notes today is exactly about that. How do you get that video? Just go to chartingwealth.com, sign up for free as a subscriber to the daily reviews. It also includes a once-a-week review and forecast. In there will be a link to this all-important training. It will help you, and again, we're always working on ways to help you visualize and see price movement, see what it is you want to do, how close you are getting to it. And these profit and loss bands that I have created are as important as close to being as important as the weekly vertical crossovers that we trademarked and created. So again, I very much want you to have this. Go to chartingwealth.com, put in your name, email address. That list is never spammed. We'll get it out to you. Let's jump into these charts for the day. What do we see going on? Well, the markets continue to move up. Little bit of a down day for the S&P 500, but when we look at price movement and where things are on the candlesticks, we see that we have another up candle forming. Price percent oscillator still moving up. Derivative oscillator still gaining upward momentum. S&P down just barely, a little bit for the day, 0.03%. But again, weekly chart still very strong. Go to the 2-day chart. It also is strong, hitting a higher high. And of course, this latest 2-day candle represents movement for Monday and Tuesday, and it is closed out. So that is what we wanted to see. Again, price percent oscillator heading up, derivative oscillator losing some momentum on the shorter chart, prices above the 2-day and above the weekly on the 2-day chart. We go to the 4-hour chart. What do we see there? We can see a bit of a topping, perhaps. We sort of ended the day with a red spinning top. Again, that's still an open box red spinning top. That is after up movement in the morning, bit of a pullback in the afternoon. We can see that even though the price percent oscillator is trying to cross over the red signal line, derivative oscillator is still strong. So maybe got a little bit of a pullback underway. Could be more than that. Price is still well above the 2-day and the weekly on the 4-hour chart. So we'll continue to watch, see what there is to see there. But again, this trade, this practice trade after that weekly vertical crossover has just gone on and on and on. It is wonderful. It is what we wanted to see. Okay, now we're going to go from the S&P 500 to the Nasdaq 100 QQQ. What do we see going on there? It was up for the day 0.15%, continuing to climb higher. Weekly chart hitting higher highs. We see the price percent oscillator heading up, derivative oscillator continuing to oscillate upwards. That is good to see. We look at the 2-day chart. It's reached a higher high. Price percent oscillator continuing to just move on up. Derivative oscillator losing a little bit of energy. We look at that 4-hour chart and we can see up in the morning, further up in the afternoon, crossing over in the afternoon. Well, did it? No, it didn't. It didn't quite do that. It looks like at first I thought we had a crossover on the price percent oscillator. Hasn't crossed over. But again, that trade that we initiated, practice trade that we initiated all the way back, let's find that, all the way back on the weekly vertical crossover that occurred on the 25th of October, just continues to move up, up, up. So that's good to see. Let's keep moving. We're going now to TLT 20-year bonds. Bonds up the most for the day, 0.83%. Now, we see a change in sentiment. We had lots of moving down over the last many weeks. The only green candle we had was a solid green candle, a bit of a cautionary, just sort of a pull up in the down, a slowdown in the down movement in 1 week. That was the week ending the 1st of November. But what we see forming this week is actually an up candle pushing through the weekly down trend line. Price percent oscillator flattening, derivative oscillator losing downward momentum. Go from the weekly to the 2-day chart. And now we have 2 up candles. That first up candle ending the 15th, representing Thursday the 14th and Friday the 15th of last week, pushed through the 2-day trend line. This latest candle pushes through the weekly. So again, haven't crossed over on that 2-day chart, but we'll see how much more things continue to move up. Now, if things start slamming down on that 4-hour chart, remember the 2-day still in a confirmed down move. Don't know that that's going to happen, but keep that in mind just in case you start seeing a real slam down on TLT. Might give you an opportunity to jump into a down move since the weekly and the 2-day are still in confirmed down moves. Now that 4-hour chart has blown through all the way back on the 14th. The 4-hour chart blew through the 2-day trend line, and in the morning on Tuesday blew through the weekly trend line. So we'll continue to keep our eye on things, see what there is to see, what there is to learn. Maybe this is turning around. Bonds have been going down for a while. Now we go to gold. Gold shows a slowdown in down movement, is a solid green candle, little bitty one, with a small wick on the bottom. Price percent oscillator still pegging down. Derivative oscillator gaining downward momentum. Remember, this is not an open box green candle. It's just a slowdown in the down movement. Maybe we should say slow up in the down movement. Anyway, we see on the 2-day chart, we have a 2-day open box green up candle. Again, that's showing some more decent up movement. Price percent oscillators flat. Derivative oscillator losing downward momentum. Don't have a crossover, so we'll continue to watch, see what there is to learn on gold. It could do what gold did for quite a while, sliding sideways before it dropped over 6 days. Really just 2 days of really, really strong down movement. But we'll see. Maybe gold's just ginning up its energy for more down movement. And that means, of course, we should keep our eye on that 4-hour chart. If it rolls over going down hard, it might give you a jumping in point for more down movement, as we had back when that 4-hour chart crossed over going down back on the 5th of November. So keep your eye on the prize. We will see what there is to see. Gold was up for the day, 0.05%. Folks, that's where we are as we end the day. We so appreciate you being with us. If you haven't purchased our book, we have them available. 13th printing autographed, signed copy for you wherever you may be in the world. If you haven't been in the United States, follow the link in your show notes to purchase the book. If you're overseas, for some reason Square won't clear your credit card, email us. We'll send you a link to our PayPal. We'll send you an actual PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. That email address, cw@chartingwealth.com. As always, we so appreciate our Patreon supporters. Thank you so much for all the levels. We so appreciate it. If you want to help us, our initial Patreon level is $30 a month, about $1 a day for all the work we do for you. It helps cut our expenses, and we do have lots of great benefits for Patreon members, including that really concentrated training that we do once a month in our monthly question and answer session. We do that 1 week a month, typically the first, maybe the second week of every month. We have that call in for you. We also, if you have certain stocks, ETFs you would like us to review for practice trading, we also put that on our list and generate that, as well as the special training. We have the short chart training, the long chart training, and the Bitcoin training, as well as a whole list of all the other trainings we have completed. We get all that out to you. Consider that Patreon support. You'll also see a link in the show notes. My friends, that's where we are as we end the day. I do hope you take the special training we've offered you, Secrets of Profit and Loss Bands. Follow the link in the show notes. God bless. All the best from the whole team at Charting Wealth World Headquarters.